Hi, I'm Becky Amble. Welcome to a Marketing Minute, and I want to share some ideas in upcoming videos about having multiple revenue streams. So today I want to share three things. What are revenue streams? Why is a diverse and sustainable revenue source important? And what's the difference between a one-time transaction and recurring revenue? So as we all know, we are pretty much in a competitive and dynamic business world these days, and revenue streams play a vital role in determining the success and sustainability of a company. For small and medium-sized businesses, especially, the ability to generate a consistent and diverse income is crucial for growth and long-term prosperity. I'm going to share some ideas with you here, as I said, in those three main areas. What are revenue streams in the B2B context? Revenue streams represent the different channels through which a business will generate income from products, services, and other sources. In the B2B context, where companies cater more to other businesses rather than individual consumers, revenue streams become even more critical. And unlike B2C companies that often rely on a mass market appeal or at least a broader population that they are selling to, B2B companies typically target specific niches and industries, making the optimization of revenue streams tailored and strategic. Well, at least we want them to be. How about the importance of diverse and sustainable revenue sources? Well, over-reliance on a single revenue stream can pose significant risks for any business, and especially when we're talking small and medium-sized companies, it's even a higher risk. Economic shifts, changes in customer preferences, or industry disruptions can severely impact a company heavily reliant on one income source. And not that companies were reliant on one income source pre-pandemic. It did certainly tell us that things can certainly be disrupted, which makes us have to adjust and change our business. Diversifying revenue streams then is essential for mitigating risks and ensuring a more stable financial future. In fact, a lot of times if you're looking for bank financing and you've got a concentration in one particular industry segment, that might be a downside for making you a desirable client. For small and medium-sized companies in particular, diversification helps build resilience against market fluctuation, and this increases the chances of consistent revenue even during challenging times. And who knows? It seems like challenging times are right around the corner these days, and people are still talking about, are we going to have a recession or not? So it's a good idea to be planning ahead. Diversifying those revenue streams then are essential for mitigating those risks and ensuring a more stable financial future. And this is going to help build resilience against market fluctuations, and it increases the chances of consistent revenue even during those challenging times. And when we expand our revenue streams, our company can better weather economic downturns and gain a competitive advantage in the market. In fact, there are companies, you've maybe heard some of the stories, that actually have been able to grow their business during some of these challenging times. There's also a difference that's important to recognize between one-time transactions and recurring revenue. Revenue streams can be basically broken down into those two categories: a one-time transaction and recurring revenue. One-time transactions involve selling a product or service once and receiving a single payment. On the other hand, recurring revenue involves generating continuous income from customers who subscribe to an ongoing service or purchase products on a regular basis. It doesn't have to be a subscription service, they just are repeat customers. While one-time transactions can lead to substantial short-term gains, and a lot of companies really push that if they're looking at quarterly reports and pushing their inventory to get things out the door. You've probably seen that happen. Anyway, recurring revenue offers more predictable and sustainable income over time. And again, particularly for small and medium-sized businesses, striking a balance between these two types, the one-time transaction and the ongoing business, is really, really crucial. I wanted to just share some of the typical revenue streams that you might be familiar with or maybe not so familiar with, and I'll touch on these in future videos. One, of course, is direct sales, traditional approach for selling products and services directly to other businesses. subscription-based services, so offering an ongoing service or access to products on a subscription or a repeat purchase type of arrangement, licensing and white labeling. We'll get into some details on that. Consulting and professional services. So maybe you've got some particular expertise in your company and maybe you sell products now. Well, maybe you could provide some additional support through some consulting means. Maintenance and support contracts, a little bit similar to what I just mentioned. Outcome-based pricing, not used an awful lot, something that might be considered, and value-added services. And lastly, partnership and referral programs. So in future segments, I will talk about some of the more traditional options in pricing strategies and then some of the more innovative or maybe new ideas that you haven't thought of. Hope to see you in the future. Thanks for tuning in. This was a Marketing Minute brought to you by Becky Amble. Thank you.